Hey real estate enthusiasts, welcome to Real Estate 101. Real Estate 101 is a series where I walk you through everything you need to know about buying a home, from dream to reality to life post-possession day. I'm Val, I'm a licensed realtor with Royal LePage Solutions with 15 years of experience. I'm super passionate about real estate and really love helping people navigate the buying and selling process. But enough about me. Today we're going to talk about financing. I'm so excited to introduce a specialist today on the subject of financing. With me is Jeff Blanchette. He's a mortgage broker with Click Mortgage, as well as a partner, and he is going to break down the whole process of buying and financing, yes, because I guess we can't do this without money.
That's right, yeah. I guess the first part of the equation is to get a proper pre-approval in place. Mm-hmm. We were talking a little bit earlier about the difference between pre-qualification calculators and a proper pre-approval. A proper pre-approval is really necessary, especially in today's market with all the changes that have occurred. Yeah, it's just important that we get a proper pre-approval in place with an application, pull credit, review income, down payment, that sort of thing, just to make sure that there's no stumbling blocks when they find a property and want to make that offer.
In my experience speaking to buyers, they're often shocked at how much documentation is required that goes into that pre-approval process. Yeah. Can you tell us a little bit about what buyers can expect to have to provide to you in order to get pre-approved?
The biggest things obviously are income. We want to review income and down payment. Those are very important. Within those two categories, there's a lot of different things. So there's, employed, salaried, hourly. There's business for self, how long. So there's a lot of instances where we actually need like a 2-year history of their income, which again, it's just more paper and more paper. There can be a lot of documentation required, but once that's done, we have it, the pre-approval is in place and you're ready to shop and you'll know exactly what your budget is.
How long does it take you to pre-approve somebody once they've provided all this documentation?
A couple hours.
Oh, that's awesome.
We have a really good online application process. And client portal, so they can go to our website, clickmortgage.ca, click on apply now, fill out the application form, and then they can actually upload their documentation to that portal. So they'll create their own login, very secure. As soon as they submit their file for approval, they'll receive a request for docs. So it'll give them
what's missing,
outlines of what we need.
Are the people still having to supply their tax returns?
Yes and no. So if a person is just salaried or just has a salaried position, we aren't using any bonus income or overtime. All we need is a job letter and pay stub. If there's overtime, bonuses, anything outside of just guaranteed hourly or salary wages, then we need to see a 2-year history. So we'll need oftentimes T4s, NOAs. If they're business for self, we may need T1 generals and business financials.
So if someone is working and doing overtime and getting bonuses, does that count towards their qualifying for a mortgage?
It does if we can use the 2-year history.
So to see it's consistent income that's coming in.
Yeah, so it would be based on a 2-year average. They look for fluctuation, but I mean if it's just solid year over year, this is the average. That's wonderful, but it's a few more documents that they'll need to provide.
Yeah. What are the down payment requirements these days?
So down payment's another one that can get a little tricky depending on where their funds are held. We always need to provide a 90-day history of any account, so whether it be RSP, investment, checking, savings accounts. 90-day transaction histories of those accounts to show accumulation of funds. If there's any large deposits, we'll need to show where those are from. So if people are transferring money from like one account to another, we may need to see 90 days on all accounts. We may ask for a lot of paper. But if it's just, they've been accumulating the funds in a savings account for a few years, we'll just need a 90-day transaction statement for that account.
So what about deposits that are coming from sources like parents or an RSP?
RSPs, similar to any sort of bank statement, we would need to see a 90-day history and accumulation of funds. Again, if there's any large deposits within those 90 days, we would have to see source of those funds as well. And then we need to see the withdrawal from the RSP. So for a first-time home buyer, they can withdraw through the home buyer's plan up to $35,000 from their RSP for down payment on a purchase of a home, and then they have 15 years to repay that without having to pay any tax on those funds. If they don't, then they'll see a tax bill. And then in terms of gift, typically we just need a gift letter signed by the parent or the giftor, and the client, and just confirmation of deposit of funds to their account.
So the gift letter is just to indicate that they don't have to repay the parent, grandparent, the monies that are being used towards the down payment.
Correct.
What is the percentage of down payments required now?
Minimum down payment is 5%. Anything between 5 and 20% or up to 20% down payment. The mortgage needs to be insured by CMHC Sagen, formerly Genworth, or Canada Guarantee, so there is an insurance premium. And at 20% down payment, there is no insurance premium.
Ideally, everybody would strive for 20% because it would cost them less for the house over the course of their ownership. But many go in with 5%.
Yeah, I mean, it's tough to save 20% of.
It is.
Of 500,000. So.
And Calgary's not cheap real estate.
No, exactly. So the majority of our mortgage applications are high ratio with less than 20% down.
Are there any additional things that the lenders will look at for the pre-approval, whether it's a condominium or a single-family home?
Condominiums, sometimes they will want to see a condo budget, a condo financials. Some lenders don't require any further documentation. If it's a condo, we need to see confirmation of condo fees, because that needs to be added to debt servicing. But other than that, not really.
How do basement suites impact approvals? I've seen a couple of those lately, especially they're high in demand because it's a great place to quarantine or have a home office. But what if there's already a tenant in place, there's income, or they're using that income to qualify?
Yeah, so in most cases we can use that income to qualify. Typically we can use 50% of the rental income added to gross income to help debt servicing.
Didn't that used to be like 80%, and then
there used to be all sorts of
scale.
fun offsets. But that's kind of the general rule. There are some different lenders who do offer different things.
So the buyer has the pre-approval, they get to go shopping, that's the really fun part. Right now we're in a very competitive market, and I always encourage my buyers, even with the pre-approval, to add the financing condition. But a lot of them want to go in there without financing. What is your recommendation on that?
We are seeing a lot more of those requests or questions about going in with an unconditional offer just due to the hot market that we're in. We would never recommend going in without a financing condition. Reason being, I mean, we obviously do as much due diligence on the pre-approval to, come up with a firm number for them to go shopping. But there are other variables. When the deal goes live or they find a property, the lender and insurer in most cases still need to see the full application with property details. And should something come up with an issue with the property or what have you, we may have trouble getting financing still. And there's some variables too. I mean, if a property has really high condo fees or really high, higher than average property taxes that we maybe didn't take into account, that can affect the debt servicing. And we're numbers are out to lunch.
But are they doing any appraisals right now on properties, especially when they've been, paying $50,000, $60,000, $70,000 over asking? Yeah,
we're seeing a little bit more of that. Not a ton in the Calgary market, but we're seeing more than we have in the past few years, that's for sure.
Are there any fees for the buyer, in addition to the down payment going in, that is going to cost them for the financing, other than the legal fees, obviously?
Yeah, not the financing per se. I mean, the other fees would be the legal fees, the home inspection, appraisal if necessary. But really, that's it. There's no fees from the mortgage broker. We are paid by the lender. So
do you have a rule of thumb of how much money buyers should budget for the cost of buying a home in addition to their down payment?
Yeah, lenders generally request 1 to 1.5% of the purchase price, which is a little extreme in the Alberta market. But rule of thumb is probably like $3,000. If legal fees are $2,000 or a little less.
And actually, legal fees right now are averaging about $1,200 to $1,500 depending on the value of the property.
Yeah, exactly.
So, but then if you add the inspections and if there is an appraisal and any other costs for them to do their due diligence, I think $3,000 is a much more appropriate budget than 1%
1%,
in our market.
yeah,
No, I
it's a
don't think
little
that's
high.
that very accurate. Yeah.
Mm-hmm.
Okay, so now I want to shift into a little bit more of the financial products that are out there, because I know no two mortgages are alike.
Mm-hmm.
For example, I know there's the Purchase Plus Improvement Program, which I am a big proponent of.
Yeah, it's a great program. The Purchase Plus Improvement Program is a really good program. We use it a lot. And the way it works is basically you get a quote for whatever the work that you want done up front. We submit that with the application to the lender. The lender then verifies the work that's going to be done, value add, submits it to the insurer, and then comes back with the approved amount. There's going to be a holdback for that amount. So if the purchase price is $500,000, they want to do an improvement of $40,000. That $40,000 of additional funds is going to be held with the lawyer at trust until the work is complete. They submit the quote, we submit the application, they get the work done after they take possession. Then there needs to be an inspection completed to show that the work has been completed as drawn out in the initial quote, and then the lawyer will release the funds.
I'm assuming then the contractor is waiting to be paid from these the trust fund.
Yeah.
The purchaser is not actually paying the contractor up front and getting reimbursed.
It can work both ways. That's a negotiation that has to be dealt with on the other side.
So they can truly have their dream home and within their budget with some of these other mortgage products.
Yes, absolutely.
What else should they know about a mortgage going in? What makes one mortgage better than another?
There's a few things to look out for. Rate is big. You want to save some money where you can, but it's good to be mindful of the other terms and conditions of the mortgage, especially when it comes to prepayment penalties, prepayment privileges. If you intend to pay down that mortgage more quickly, or you're going to have some funds to do so, you want to make sure that you have the ability to do so. So that's important. But payout penalty calculation is a big one. You want to discuss that with your mortgage broker to know what that's going to look like should you have to pay that mortgage out in full within the term of the mortgage.
So it is good to get a HELOC at the time you apply for your mortgage. But so first of all, maybe tell us, what is the HELOC?
Yeah, so a HELOC is a home equity line of credit, essentially a line of credit that is secured by your home. So if you have the equity in your home, you can access it through a HELOC product. There are a number of lenders that offer that product. It can be standalone, just a line of credit by itself, or behind another mortgage. Or some lenders offer a combo product, which has a mortgage portion as well as a line of credit portion. As you pay down your mortgage, line of credit balance or available limit increases. So again, it really depends on what are your goals or what do you want to use your financing for. But it is, if you're, again, I think I said this before, but the line of credit can only go up to 65% of the value of the home. So you do have to have some pretty good equity built up in your home to access this product. But it can also be set up at time of purchase. If you have 20% down, you can add a line of credit even for $1 beyond your mortgage, and it will grow as you pay down your mortgage.
And I guess you could add it later on. If you're at the home for 5 to 10 years and eventually you want to redo the basement, you can take out a line of credit then.
Exactly. Yeah, it's a great tool.
All right. Well, do you have some of the big tips, maybe 3 or 4 tips that you would pass on to a first-time buyer entering into their mortgage?
Yeah. One, first and foremost, it's never too early to get a pre-approval and get a proper pre-approval done. You should have your credit checked. You should have your income verified. You should have the down payment conversation and verification. Those 3 are very important. Obviously, you got to check credit because you want to make sure that there's nothing on there that's going to impede you buying a property. Or if there is a blemish or a derog on your reporting on your credit bureau, we want to make sure we take care of that before you find your new home. So secondly, I would say it's very important to talk to your broker about what your goals are with your financing. So is it to pay down your house as soon as possible? Are you talking to a broker about accessing the equity in your home? What is your ultimate goal? And then you should have the discussion about the process, especially for first-time homebuyers. So it's important to discuss with your broker the entire process from pre-approval, getting that done, getting verified, knowing what your budget is, to making a purchase, finding a property, making an offer, getting that offer accepted. Then we need to send the deal into the lender. It needs to go to the insurer in most cases. Just what time frames for all of this so that you're comfortable with that process. And then all the way up to funding. So all the way up to instructions being sent from the lender to the lawyer, what to expect through that process as well. And we discuss that with all of our clients from front to back, so there's no surprises.
And then you follow up and reach out to them in 5 years or 3 years whenever their mortgage is, because of course the mortgage doesn't go away for a few decades.
Absolutely, yeah. Well, I mean, unless you're really lucky, but yeah. So typical term, most people take a 5-year term now. That's generally the best rates, and people feel more comfortable having that 5-year term of not having to worry about fluctuations in rates and stuff like that. So we would, if they had a 5-year term, we generally contact them 3 to 6 months out to kind of start talking about what's available for them now. Obviously, a lot changes in 5 years. So what are their goals now? Have they changed? They have kids. Maybe they need to, finish that basement finally, or what have you. So, we contact them at that point. We have touch points throughout the term. So we're in touch with the clients at least once a year, just to see how things are going, if anything's changed, if they need anything, or we can help. But definitely at the end of the term, we're in touch with them.
So Jeff, how do they reach out to you and get this process started?
So you can go to clickmortgage.ca to our website. You can fill out an application there. If you'd like to contact us, you can call us at 403-466-7158 or email me at jeff@clickmortgage.ca.
Well, thank you so much for joining us today.
Thank you. Thanks for having me. This has been fun.
Yeah, it was very educational.
Yeah, great.
Thank you so much for tuning in to Real Estate 101 and this episode on financing. I hope you learned how to tap into that mortgage money to fund your dream home. If you liked this episode, please hit the like button. And if you want to learn more about real estate and follow me here on this YouTube channel, please hit the subscribe button. I put out videos every week. See you in my next video.
Don't forget to breathe.
Do you have a blooper reel?
1, 2, 3. I'm super passionate about real estate. You don't make me laugh.
I like that one.
Did you? Because I kind of screwed it up a little wee bit. Good.
Do you want to do it one more time?
Nope.
Okay.
You cut that.